Welcome to my YouTube channel on long-term investment, which is about managing your own money and securing your future. In our previous video, we have covered different reversal patterns, candlestick chart reversal patterns, and we'll continue our journey on the reversal candlestick patterns in this video too. In today's video, we will cover inverted hammer, reversal pattern, star reversal pattern, which consists shooting star, doji star, morning and evening star. Inverted hammer and shooting star. In figure 3.19 is about inverted hammer and figure 3.20 is about shooting star. Here is the indicative inverted hammer and this is the shooting star. The inverted hammer is a bottom reversal line. So inverted hammer will always form when there is a downtrend. Similar to its cousin the hammer. It occurs in the downtrend and represents a possible reversal of trend. Common with most single and double candlestick pattern, it is important to wait for the verification. In this case, bullish verification. This could be in the form of next day's opening above the inverted hammer body. Uh, if inverted hammer is formed at the end, at the continuation of downtrend, the next day opening somewhere should be here above the body of the uh, inverted hammer. So this will indicate that there is a possible reversal of the trend. Since the closing price is near the low of the day and market actually traded much higher, verification is most important. Rules of recognition. The small real bodies form near the lower part of the price range. In case of inverted hammer, it is at the lower range of price range. In case of hammer, it forms at the upper part of price range, upper part of the price range. No gap down is required as long as the pattern falls after the downtrend. So there should be existing downtrend in the place. The upper shadow is usually no more than two times as long as the body. The lower shadow is virtually non-existent. A downtrend has been logic behind this inverted hammer. A downtrend has been in the place when the market opens with the gap down. A rally throughout the day fails to hold and market closes near its low. That is the reason it looks like the inverted hammer. The opening of the following day is critical to the success or failure of this pattern to call a reversal of trend. If the next day opens above the inverted hammer's body, a potential trade reversal will cause shorts to be covered, which could also perpetuate the rally. The length of the shadow will help in determining its strength. The upper shadow would be at least twice the length of the body. There should be no lower shadow, or at least not more than 5 to 10% of high low range. This is the logic and this is the rules of recognition for inverted hammer. A shooting star. A shooting star is a single line pattern that indicates an end of the upward move, though it is not a major reversal signal. It indicates that uptrend has halted for time being. In this figure, we can see those four green bars, which indicate that there was an uptrend in place, and the shooting star has occurred at the almost at the end of the uptrend. Shooting star reason the identification. Price gaps open after an uptrend. A small real body is formed near the lower part of the price range. Upper shadow is at least three times as long as the body. The lower shadow is virtually non-existent. So the inverted hammer coming in the uptrend is called shooting star. Shooting star during an uptrend, market gaps open, rallies to new high, and then closes near its low. This action following a gap up can only be considered as a bearish. Certainly, it would cause some concern to any bulls who have profits. And that is the reason why shooting star is formed. The people who are in profit, they'll try to book their profits at this stage. The Doji Star. Uh, a Doji, we have seen what is star. Now, a Doji happening at this position will be called a Doji Star. A Doji Star is a warning that trend is about to change. Remember, Doji Star is a very strong warning because Doji is a candlestick where prices almost open at the close and open at the same point, which means there is a major indecision between buyers and sellers. It is a so Doji Star is a warning that trend is about to change. It is a long real body which should reflect the previous trend. A downtrend should produce the black body as it is shown here. The market is in downtrend and it has produced a black body. An uptrend, a white body, as it is shown here. uptrend, and this is the trend. The next day prices gap up in the direction of trend here for uptrend. Then close at the opening. When prices close at the same range as opening range, then it is called doji. This deterioration of the previous trend is immediate cause for concern. The clear message of the Doji Star is an excellent example of value of candlestick method of charting. Rules to recognize. A first day is long. In case of an uptrend, in case of downtrend, it should be black. A second day gaps in the direction of previous trend. A second day is doji. A shadow on doji day should be not be excessively long, especially in the bullish case. What is the psychology behind this pattern? Considering the bearish doji star, a market is an uptrend and is further confirmed by the strong white day. So previous day is strong white day. A next day gaps even higher, trades in small range and then closes at or near its open. This will erode almost all confidence from the previous rally. Many positions have been changed, which caused the doji in the first place. The next day's open, if lower, would set the stage for reversal of the trade. These are the examples which have been shown. So here we can see the market was in downtrend up till this point, and then here the doji star is formed. The next day confirmation because market has opened slightly higher, and then further it has gone up after that point. This is the another confirmation where doji star has happened in the uptrend, and here the doji star has formed. The next day confirmation, gap down opening, and then for next few days market has moved into downtrend. Morning star and evening star. Again, where this spinning top appears based on their location, they are called morning star or evening star. In case of spinning top appearing in downtrend, is called a morning star because this is a reversal pattern and it indicates the change in the trend, downtrend to uptrend. So it is called morning star. Whereas in uptrend, if it appears after the gap up or spinning top, then it is called as a evening star. Morning star. The morning star is a bullish reversal pattern. Its name indicates that it forces higher prices. It is made of long black body followed by the small body, which gaps lower. The third day is white body that moves into first day's black body. An ideal morning star would have a gap before and after the middle. So here, there was a gap down and there was a gap up opening here. Similarly, evening star, it is a bearish counterpart of the morning star. Since the evening star is a bearish pattern, it appears after a low or during an uptrend. The first day is long white body followed by the star. Remember that star's body gaps away from the previous day's body. The star's smaller body is first sign of indecision. The third day gaps down and closes even lower, completing this pattern. Like the morning star, the evening star should have gap between the first and second bodies, and then another gap between second and the third bodies. Rules for recognition. The first day is always the color that was established by prevailing trend. That is, an uptrend will yield long white day for the first day of the evening star, and downtrend will yield a black first day of the morning star. The second day, the star is always gapped from the body of the first day. Its color is not important, so it could be either white or black. The third day is always opposite color of the first day. So if it is a downtrend, the first day is black, then the third day will be white. And if it is a uptrend, the first day is white and the third day will be black. The first day and most likely third day are considered the long days. Morning and evening doji star. So here it is nothing but doji coming instead of spinning top, a doji is forming. And if doji comes at this point, then it is a even stronger indication that trend is about to change because doji is very uh, uh, a candle which shows complete indecision between buyers and sellers. So there is a definition and all those explanation regarding morning and evening star I have given here. I can share this PPT with you. You can study at your own leisure also. And these are the examples which are shown here. Doji star forming in the downtrend, which is morning star. And here it is a evening star, which is also called abandoned maybe because the gap is very high.
Thank you for watching this video. In our next video, we'll continue with our reversal candlestick patterns and we'll study piercing line and dark cloud cover. So guys, thank you very much. Please like, subscribe it and forward it to your friend. Thank you.